Hey everyone, this is C Crypto Daily Buzz. Today is March 4th, 2026. This channel summarizes the most important crypto news for investors in Southeast Asia, including traders in the Philippines, Vietnam, Indonesia, and OFW communities using crypto and remittance every day. First, a big regulatory signal from the US that matters for Bitcoin and stablecoins worldwide. U.S. President Donald Trump is urging Congress to move forward with the Clarity Act, while criticizing banks for trying to undercut the genius stablecoin framework he signed last year. At the same time, JP Morgan CEO Jamie Dimon says stablecoin issuers that pay interest should be regulated like banks. And the global watchdog FATF is warning that stablecoins are increasingly used in sanctions evasion and money laundering. For Southeast Asia, from Singapore to the Philippines, this tells us that large regulators now see stablecoins as part of the core financial system, not a side experiment. My view is that this will push serious issuers toward full bank-level compliance while making life harder for shady offshore projects, so investors should expect stricter KYC, slower onboarding, but a safer environment over time. Second, how Bitcoin is behaving while global markets react to war headlines and macro stress. Bitcoin is trading around $68,000 as U.S. strikes in Iran, rising oil prices, and a stronger dollar put pressure on stocks, gold, and most risk assets. Analysts note that the recent bounce was driven partly by short covering, and some warn that a broader liquidity squeeze could still pull BTC lower in the short term, even though the long-term bull case remains intact. For investors in Southeast Asia, including OFWs sending money home and traders in Vietnam and Indonesia, this environment means Bitcoin is acting like a high-beta macro asset again, moving with global fear rather than decoupling as a pure hedge. In my opinion, this is a time to focus less on guessing every wick and more on position sizing and cash management, because sudden headlines can flip sentiment within hours. Third, a reminder from the Philippines about where regulated crypto activity is heading in Southeast Asia. Recent updates from Bangko Sentral ng Pilipinas and the SEC continue to highlight licensed virtual asset providers such as Coins.ph and PDX as the core channels for compliant trading, remittance, and business payments for Filipinos and OFWs. Fintech reports show strong growth in stablecoin-based remittances and partnerships between local players and global firms, while the NTC's earlier order to block 50 unlicensed platforms still signals that offshore, unregulated sites are not welcome. For investors and builders in Southeast Asia, especially in the Philippines, my view is that the direction is consistent. Regulators are tightening around unlicensed venues while giving more room to banks, e-wallets, and licensed exchanges that plug stablecoins directly into cross-border payroll and remittance flows. If you are sending money from abroad or building products for Filipino users, it makes sense to prioritize rails that sit inside this regulated framework, even if they sometimes feel slower or stricter. To sum up today's stories, Washington is moving toward clearer rules for stablecoins with the Clarity Act debate. Bitcoin is trying to hold the $68,000 zone while global war and macro risks keep volatility high. And in the Philippines, licensed exchanges and stablecoin remittance rails remain at the center of the regulated crypto ecosystem in Southeast Asia. This video is for information and education only and is not financial advice. All investment decisions and risks are your own responsibility. If this video was helpful, please consider subscribing, liking, and turning on the notification bell.